Hiya, what's up?
Hey, how are you?
We're good. We're good. We're excited. We're excited to chat because we kind of understand what you're building, but not really. And that's our sweet spot. That's our sweet
Let's
spot.
get into it. Let's do it.
Yes, you're the co-founder and co-CEO of August, which is the largest DeFi prime brokerage, and most recently Upshift, which is a DeFi product kind of democratizing access to institutional strategies and yield. So I think you guys came out of stealth in April this year, already have $500 million of TBL. So pretty successful launch so far. So I guess, yeah, do you just want to kind of give us a quick overview of Upshift and then can get into a bunch of questions we have?
Yeah, absolutely. Let's do it. So, at a high level, what we've seen in terms of trends is this request to vaultificate everything. And it really started out with Athena around, how do I tokenize a basis trade and then make it composable, not only in DeFi, but also CeFi. And so I can trade against it, borrow against it, put it on exchange, have it in custody, and still earn some yield. And you can even take it back to, just stable coins and yield bearing stable coins and money markets, wanting to have some sort of yield on any idle capital. And so we've taken that a step further where we're seeing a lot of requests around, okay, strategies outside of just basis, let's say cash carrier, point yield farming, or sexdex arbitrage, or just liquidity provisioning deals, and how do I tokenize that and then make it composable across the ecosystem.
Who's asking you to vaultify everything? Who's that? This is the first time I've ever heard that word. Are you making this up, or are people actually DMing you, being like, "Listen, I need to vaultify this"?
Yeah, it's a good question. When we were working on this in 2023, we were educating people on what a vault is. Starting last year and into this year, everyone's talking about vaults.
Okay,
And
well,
I think
educate
that
us
initially,
here. Educate us
yeah,
here. I think
yeah.
it's a good point to land.
Of course. I would say, we've initially saw the term vaults come up with Morpho. And so the way that they structure these, lending vaults, it's really, a smart contract that is isolated. You have a curator who is managing how the flow of funds is getting allocated. You have some sort of strategy, and you have folks who are depositing into that, and that is then getting allocated across, whatever lending opportunities on the Morpho side. And then for us, it's just getting allocated across systematically across whatever the yield opportunities may be. So that could be, different chains. Today we're integrated into 23 chains. That can be across different protocols, and that can be across a number of different assets.
So is Upshift a marketplace, or are these vaults that you guys kind of own and manage?
Yeah, so it's a marketplace today. Great question. So we work with a number of curators. And going back to the initial question, I would say it's predominantly curator driven. So a lot of these curators have different strategies that they want to make composable. And then, from that perspective, then we get, retail demand around, all right, well, this strategy is really interesting. Have you tried it on this chain or that chain or with this protocol or with this ecosystem? And so there's kind of three main buckets where we see that demand happen. One is on the pre-deposit side, ecosystems that want to raise capital and then deploy it into different strategies. Then there's just the protocol and ecosystem side. So let's say Monad wants to launch a vault so that they can really optimize across all of the different protocols within the Monad ecosystem and make that composable. And then there's the last vault, which is like tokenized fund strategies. And so you have, a specific curator, as I mentioned, who has, an interesting differentiated strategy, and they're looking to make that composable.
Yeah, it's interesting because I think we've had some folks on that I would say are doing like, and I think you even mentioned Athena, like building a product around a very specific vault strategy, to use your language. And so I guess going deep on one specific product, and you guys are kind of going wide and uh, supporting all sorts of different products. So I guess I'm curious, like, is the plan that there will be some really, you're trying to scale the novelty and like the longer tail here and seeing a much bigger market opportunity there? And if so, like, what are some of the more novel things that are being vaultified? I guess I'm using the word. She's got me.
There you go. There you
Um,
go. um, yeah, you're spot on, right? What we've seen is over the last 3 years, DeFi trading is a full-time job. There's so many chains and ecosystems and protocols that you may be an expert in the EVM space, and you just don't have bandwidth to do the same in Solana or vice versa. And so we've actually even seen this on the institutional side where teams of, call it 10 to 12, will be purely focused on a specific ecosystem, chain, or strategy, and not necessarily have the bandwidth to do that across other chains and ecosystems. And so they're more than willing to partner with some of the curators that they highly respect in order to technically outsource that out as well for some of the capital that they're willing to outsource. I think you see the same thing with Morpho, and all of these other lending platforms as well, right? You are outsourcing idle capital to the curator that you feel most comfortable with when you underwrite them in order to get some level of yield based off of the markets that they allocate to. So I would say it's very similar in that sense, and you're exactly right. It exposes you to some of the long tail. It exposes you to some of the more systematic strategies, and the ones that I find most interesting are, we've seen basis obviously get product market fit. Cash carry is interesting. We're seeing some really interesting strategies around market making. That is historically something that is very CeFi. CeFi driven. You don't really get exposure to that on chain, and so we're seeing some of that come into vaults and get tokenized.
How does that?
And then
That's interesting to me. There's a big gap in my, I guess, understanding of how that works.
Yeah,
With
great
the
question.
vault specifically,
So it's twofold. If you're market making on chain, then for example, it's a very systematic fund or curator that is running an algo across whether it's multiple DEX pools, whether it's across multiple pairs, and they're doing that fully systematic and then tokenizing it. It'll probably have a longer lockup because it's very hard for you to pull liquidity in and out in terms of just managing your P&L for those positions, and you're just managing your liquidity on either side and taking transaction fees based off of that. We're seeing that also expand into CeFi. And so, for example, you might be market making for a specific pair on an exchange. And so how do you tokenize that and now make it available as well for people to make share P&L on that?
And so, and these curators are taking a fee for this sort of work they're doing, right?
That's exactly right.
Yeah.
I always get mad when I open up these DeFi products and I see all these weird acronyms or vault names. And I'm looking through yours right now. It's like the Treehouse Growth Vault, the Hyperbeat Ultra UVTC, the K3 Neutral Pre-Deposit Vault. It's how does a retail participant make sense of this, or and how do you, I guess, balance kind of the complexity versus simplicity trade-off?
Yeah, it's a great question. Users will always tell you that they want options, but they do not want options, right?
I just want high yield. Just give me a bunch of yield.
There you go.
Sort by yield. That's it.
Yeah.
Target APY. I'm in the
100%.
Meso MUSD vault.
100%. I mean, for us, we're going to launch a meta vault. And so that is, we're calling that core UCC that will be allocating into a number of the vaults underlying based off of performance. And so you don't have to make those decisions. You can just allocate into that one. But if you have a specific opinion for, call it a market, a chain, an ecosystem that you want more exposure to than core USDC has, then you can go and invest obviously directly there. But I think this is the major issue across DeFi, right? Is that there are too many options. And if you look at, Web2 platforms on the wealth management side, typically there will just be an earn vault, and that will just be one place, one deposit asset, and one yield source. And they will aggregate the underlying. Obviously, if you don't like that performance, you can always become a DeFi degen and trade it yourself. But for the most part, it makes the simplicity so much easier.
Man, I was talking to my old man over Thanksgiving weekend and found out he's still in mutual funds, which was just a crazy concept to me in 2025. And yet it was just the simple thing that had been recommended and that they did, and it was doing okay. And so,
I mean, people are going to be using Curve in 50 years just because they got comfortable with it today.
it's so true. I'm really
it's true, but the fees on mutual funds are crazy, right?
But,
They're
well, don't get me
so
started.
nuts.
Don't get me started.
Yeah.
I went through it. I had ChatGPT out. We did the math. We did.
People will pay for simplicity, and
100%.
so
Yeah.
it just depends on what the user experience is. We haven't cracked it in DeFi yet, but we'll get
I am
there.
really interested in sort of this. And Josh and I were talking about this before, the sort of internet capital markets type of approach, right? We're seeing these vaults come in. We're talking about USD AI and Daylight, which is sort of, I think, just announced a fundraise today. This idea that you can kind of leverage the internet and the global pools of capital to be able to bring capital together to bootstrap capital intensive businesses. So like I think loans are the most explicit thing here. And it feels like just one of like a place where TradFi and DeFi are going to come together in a really interesting way. You know, people can maybe grok the idea of wanting to lend against GPUs or lend against solar installations. And then the sense of just capital coming from anywhere and the yields that you can get through products, you know, like yours and lending on the internet generally, feels like it's a new type of funding mechanism for these teams. Are you seeing Upshift used in a similar way?
Yes and no. So, you know, for us, I would say the area that we are predominantly focused on is underlying assets that have, you know, not necessarily instant liquidity, but if it's not instant, then we have a direct redemption. There are secondary markets, but they're fairly liquid. What we don't focus on is, you know, areas that require a level of credit and risk underwriting that we don't necessarily have in house. And I think if we look at, you know, some of the lessons that hopefully were learned from the last cycle is that not everyone knows how to underwrite a GPU, and not everyone should assume that they know how to underwrite those assets, because you know the secondary market for those changes so frequently, and the liquidity is so thin, that it does require a very specific skill set in order to
Right.
be able to risk underwrite. So, you know, I would say yes and no. We do want to create liquid markets for those types of opportunities, but under the right, it always comes down to the right curator. And I think sometimes DeFi will pick the wrong spokesperson or the wrong curator to really drive these markets for us. And we've seen how that plays out with, you know,
Yeah, right. You don't want to
effective
be doing a
altruism.
marketplace here where you're sort of relying on trust of these curators to not to
That's
have a
exactly
lot of
right.
long tail risk associated with it. That makes a ton of sense. Yeah.
That's exactly right.
Yeah, so I think you guys have $500 million in TVL. I think I've seen you mention that you feel like it's under farmed. There's a points program happening. So I wonder if you can just kind of paint the big vision opportunity here for people who are maybe intrigued and wondering if they should go put some money into this thing.
Yeah, absolutely. We have a lot on the docket for Q4. We have a couple vaults that are launching in the next 3 to 4 weeks. So very, very excited about that. We just made an announcement earlier today with regards to our vault on Monad. We have vaults coming on Solana. And so, you know, we have a lot of exciting opportunities where, you know, we are spearheading a lot of the first types of yield strategies for those. And then with regards to our points program, you know, at some point that will convert, hopefully in the next few months here. And so we're very excited about that opportunity as well. You know, our goal is really to make sure that users get organic yield. And we really want to differentiate ourselves there. We tend to try to stay as far away from mercenary capital as possible, and really try to make sure that we are providing some
Okay,
sort
but
of
how
value.
do points programs equals mercenary capital? No.
It depends. That's a good question. It depends. You know, I think a lot of times what we've seen, at least with our users, is we get a lot of product feedback from the folks who are farming our points. And so we have a lot of people who've been farming our points since day one. The product feedback that we get from those users are directly put into our sprints. It's typically anywhere between front end or, like I mentioned earlier, different yield strategies that folks want to see. And so we've actually seen, you know, I would say typically a points program, you'll see someone just farm one pool. Predominantly our users are farming a number of our vaults, and then very active in whether it's Discord or directly with our team as well.
I'm curious how global the participation is here, because my sense is the big opportunity is just the borderless, barrierless participation in these. But do you see densities of users in specific regions?
Yeah, great question. We specifically see densities around South America and Asia. I would say those are predominantly two of our larger markets,
Interesting.
but definitely global. And I think, you know, it goes back to where, you know, banking may not necessarily be as accessible as you would see in other jurisdictions. We don't serve the US, but, you know, obviously in the US, access is a lot easier than some of these other places.
How did Upshift perform during the chaos of liquidations last week? Yeah, I guess like what risk factors should people be concerned about using this product?
Yeah, great question. So our vaults currently don't have large exposures to hyperliquid per markets or exchange per markets. And so we actually performed quite well. On the August side, our institutional arm, we only had one margin call, and that was topped up, no liquidations. And so, you know, I would say we are very conservative. I mean, the team's born out of the former, you know, FTX collapse. And, you know, we take, people will tend to tell us that our LTVs are far lower than what they can find on chain. And that is intentional. It is not a bug, it's a feature. And so we try to be very intentional about how we think about risk. And so we didn't have cascading liquidations. Obviously, not great to see in the market more broadly. It did flush out a lot of the leverage, and we're seeing a lot of corrections now happening as people think about yield strategies and where they park their money on chain.
What are you seeing on the institution side? I imagine you're with the prime brokerage. Obviously, you're in conversation with a lot of these institutions. Obviously, a big narrative is it's no longer the institutions are coming; like they're very much here. And I'm curious, is it still just primarily, Bitcoin, Ethereum, like the majors that they want exposure to, or are they starting to kind of work their way down the risk curve?
Yeah, so even back in my time at FalconX, it always was the case that an institution would start with exposure to Bitcoin and ETH, and then they'd get their feet wet, and then all of a sudden I'd get a phone call for like some top 100 market cap asset, and so
Like
I think
Farcoin, right? That's what they're
yeah,
asking.
that's exactly right. That's exactly right. And I have to pause and say to myself, like, how is this happening? But people really just like to chase yield in the same way they do in public markets. And so what we've seen is a lot of focus in the last Q3 specifically around digital asset treasuries. I would say that was where institutions were predominantly focused, definitely on the tail end of that. And so now, even within the digital asset treasuries, you're seeing a lot of requests for alternative trading strategies, because there's so many out there in the market that they have to differentiate themselves. And so can you only sit on staking yield returns, or do you need to expand into some other strategies? The biggest issue that these digital asset treasuries have is they have more capital than the DeFi market can sustain. And so I think now we're getting to the question of scale and size. And so that's going to really lead to the, hopefully, maturation of the space as a whole.
What's your sense of growth on that traditional side through DATs or otherwise? It seems like we had this big moment of hype, and now there's not a whole lot of conversation, at least in sort of the broader circles. Has that died off? Has it just normalized?
Hasn't died off. I think people tend to forget that these institutions have investment committees. It takes months for new processes to go through, and every single large institution has a head of digital assets at this point. And their thesis and job is strictly to bring in some part of the technology in-house to make either operations more seamless, things more cheaper, or launch products where they can charge a lot of fees. I mean, if you look at BlackRock's Biddle, that was a huge success, and now BlackRock is expanding into other assets and other asset types. And so, obviously a lot of institutions are looking at the success over here at BlackRock, looking at how much they're charging as well, seeing this as the most successful ETF that's ever launched, and saying, all right, well, what can I do in-house as well? And so I think, maybe we've seen it quiet down, at least as it pertains to the DeFi sector, but we're at least seeing that a lot of these asset issuers are trying to bring these assets on chain, because it also exposes them to net new markets that maybe they weren't exposed to historically.
All right. Second week of January, beginning of Q1 2026. My God. Are we higher or lower?
Yeah, look, I think we'll go lower before we go higher. And the reason I say that is I keep harping on this. We are all macro traders, right? We're all looking at the China tariffs and trying to figure out what's going on. And gold is at an all-time high. I think gold is over 50% up year to date. Bitcoin's up, call it roughly 25% or a little bit less, 30. And so we are all kind of trading around the macro volatility. But I do think, right, I think it's around, call it 110 right now. So definitely think we can get higher come Jan. It will truly depend on macro. And also it'll depend on, as you mentioned, Thanksgiving, right? We do tend to see a holiday pop in Q4. Everyone goes home, talks about how great Bitcoin is. And, you tend to see that retail Robinhood
Bitcoin
pop.
on sale going into Thanksgiving, bullish catalyst. Thanks for hanging out with us and taking us into your world here. You want to go participate in these yields, you can go to Upshift Financial. What do we got here? Upshift.finance. It's going to confuse you a little bit, I think, but there's a lot of big green numbers there that might get somebody like Josh to go.
I'm excited for the MetaVault, to be honest.
Yeah.
Give me the MetaVault and I'm in there.
All right. Thanks.
Next week.
All right,
Thank you. Thanks, guys.
Cheers.
Peace.